Hey guys, how you doing? This is Rowland Webb with theordinaryinvestor.com and just wanted to bring to you how to invest during a recession. So I'm going to go ahead and pan down to the screen now the actual stocks just to show you some historical perspective of recessions and how to invest if you're going to invest, during times like this. Now, some people are really strapped for money, and if that is the case, the only thing you can do from a financial perspective, or that I suggest you do, is to watch and see what happens. However, if you have an emergency fund, you have some cash on hand, and you're ready to try to put your toe in the market, and you're ready to invest, here's some things you just want to look at. So this is taking a look at some of the recessions in the past and how to invest. But here we go. All right, so this here is a chart of the S&P 500 here. As you can see, this is over the past what is this, 25, 26 years or so. So let's look and see the patterns here, right? So look, you have the S&P at 150. It gets down to about 90 bucks. That's about 30% downturn, and that took 2 years to get down there. Okay, 30% there. All right, let's keep looking. Here goes the housing bubble. 150 again, got down to about 85. That's almost a 50% retracement. And this one happened a lot faster. So we're talking about December '07 to December. Wait, so that was 1 year. Okay, so the last one took 2 years. This one took 1 year to get to the bottom. Now we're up here, and I'm going to go ahead and reduce this time frame down so you can see a little bit more detail. All right, now we're here where we were at 333 and we got all the way down to 228. So we hit a 30% retracement and we hit it in 1 month. 1 month. So I'm anybody who says they can predict what's going on, uh, I would take what they say with a grain of salt because nobody really knows what's going on here. You can just look at past experiences and past historical data and then try to make your best guess of what's going to happen. But nobody really knows what's going to happen, especially because of this. Um, especially because of this pandemic. It's new territory for everybody. So people don't know how it's going to pan out. You can just take your best guess. But what I'm telling people here is you have the same little gap here, same little cone or horseshoe that you would have in some of the bigger ones. I'm gonna go back out to the max so you can see it again. Where you want to invest is you want to be in this horseshoe here. Now, it's very, very, very hard to guess a bottom. So what most people do is something called scaling. Okay, let me come back full. So what scaling is putting a little bits of money in bit by bit into the market so that your average is around where the low is. Okay, that's called scaling in. So each month, maybe you put some money into a certain stock or your favorite stocks, whatever you're investing in at the time, and you can get an average that's around the low if you're going to be putting money in or extra money in. Okay, so scaling in is the way that you can get in those dips within a good place there. A lot of the investing I did in 2016, I have displayed on my website, theordinaryinvestor.com. You can go there and kind of look at, where I invested and where some of those stocks are now. But those dips, and we're in a recession right now. We are in a recession. We're in the midst of one right now. It's headed by the coronavirus, but we all knew that something was going to be happening in 2020 anyway. So you want to get in those dips, and right now we're in those dips. And let me tell you, a lot of the people that call me up and have taken courses and have done some counseling and workshops with me in the past, I'm already hearing great testimonials. If you had Panic Profits 2020, if you took that course, I'm getting nothing but great feedback from that course. Now I think it's about 10 or 15 bucks, so go ahead and get that if you can. It's a short course, about a little less than an hour, but you can preview it. Go ahead and get that if you can. It'll be well worth it, and it's going to have a return on investment. Um, it's a pretty strong possibility at this point, and I explain to you why in this case. So you waste 10 or 15 bucks, you can go ahead and get that there. Anyway, we are in a curve. We're in these curves right now. So let me go back and matter of fact, let me just take me off screen. Okay. We're in the curve right here, the dips. We're within these curves right now. We're within them. Now, I'm going to show you something else here that may or may not interest you, but this is again, this S&P 500, Standard and Poor's. You know, you get this uh, in various names and ticker symbols based on the brokerage firm. Vanguard's, I think, is VOO. I believe Fidelity and Schwab, they each have their own version of this. But this is the overlying chart, and I'm on Yahoo Finance right here, where you can just click on there. The ticker symbol is SPY for S&P 500 Trust. Put it there. But you want to kind of dip your toe in the water a little bit at a time. Now we're going into month 2 of this particular recession, and we're already starting to get some recovery. Let me just show you here. I'm going to show you some stocks here that have been doing quite well. Recession. This is Dollar General. As you can see here, let me go 1 year so you can see. Look here. You got you have Dollar General. It's hitting all-time highs right now. So it had the dip already. It went down maybe 20% or so, and now it's back up at all-time highs. It has already completely recovered. Let's look at another one. This is Wingstop. Wing, ticker symbol Wing, WING. Look here. It got hit from about its maximum was about 104-ish. And before the recession hit or coronavirus hit, it was at about 99. Look, it's already back at about 96. That's almost a full recovery in Wingstop, ticker symbol WING. There's some more. AMZN, which is Amazon. As you can see, its high was roughly about $2,100 or $2,100 per share. It came all the way down, went all the way down to, what was that, 1,600, and now it's back up at $2,000. So as you can see, it's not quite back at the highs, but it's already kind of going through its recovery period almost. One last one. WMT is Walmart, and these are just a few ticker symbols I just happened to notice. There's nothing particular about these. I don't have all of these shares or anything in my portfolio. These are just some things I was noticing on the charts that I was looking at. If you look here, again, before the recession, we were about right here, 118, and we're closing in. I think Walmart might actually hit all-time highs this week. So as you can see, I'm gonna go back to the S&P, but some of these companies are recovering, and they're recovering pretty quickly. Okay, it's S&P 500. And I'm going to go back, and if you notice, the recoveries are a little quicker and the downfalls are a little faster each time. Look, this was a 2-year fall here, right? From 2000 to 2002, and then a recovery. This was from October 2007, um, uh, or let's say December 2007 to about December 2008. That's 1 year until it got down to the close to the bottom. All right. If the trend is the same, you can anticipate this next one. It's been cut in half, maybe cut in half. I don't know. Nobody knows. But this one might not last as long. It might last as long. Who knows? But you want to be getting in, and as you're getting into the market, you want to be scaling in. Okay, you want to be scaling in, getting around this curve. If you get around this area here, and you're scaling a little bit by little bit, and your average is down here. Even if you start scaling in like now, and let's do both scenarios. Let's say, okay, the stock market goes up. If you start scaling in now, buying a little bit here, and then you buy a little bit here, and then you buy a little bit up here, your average is going to be here. It's still going to be lower than the high. All right, let's say the stocks go down. They come down here, and then maybe here, and then go down a little bit further. Your average may be in here, which is still a good price. So scaling in, buying stocks a little at a time allows you to not necessarily catch the bottom, but you get kind of close to it, depending on your time. So um, that's one of the ways. Let me say that's one of the ways you can invest in the stock market during a recession. You can scale in, buy stocks a little bit at a time, or maybe each month as you get money to invest. You can maybe put in a little bit each month, or if you had money to the side, waiting for an opportunity, then you can put a little bit of that money in each month or week or however, whatever you have plans for it to do, and just divide it up by that time frame. You can put in little by little, and you can scale in, and your average is going to be around where the low is. So you at least will not be at the high, which is what you don't want to do, what you want to avoid. You don't want to be buying at the high. So this is how you invest in a recession. Okay, if you want to overhaul or overcap of more of this information, please go ahead and get Panic Profits 2020 by going into just a little bit more detail there and look forward to some of the courses that I have coming up because they're going to be awesome. Um, if you want more information, you can go to theordinaryinvestor.com. You can get it at theordinaryinvestor.com. And again, it's just a small price. It's attainable and it's something that's accessible for everyone. You know, the price is a price that's accessible for everyone. All my stuff, I have a 30-day money back guarantee, so it's risk free. And I can say with a high degree of certainty that you will get, 10 to 20 times the return on your investment on that course. I already got people that are hitting me up that had contacted me, a couple weeks ago that are giving me testimonials of what they have done already. So, go ahead and get it if you're not, and if anything else, it's a time saver. So, you'll get everything you need in 50 minutes, and you can even preview the first 10 minutes. I'll give you a brief intro of myself. So go there, the Panic Profits 2020, go to the website, theordinaryinvestor.com, click on that Panic Profits 2020, and even just check it out. Just do the previews, before you even purchase to see if it's something that you want. I promise you I'm going to give you the value. I'm all about giving value here. So you will get the value and more once you get there. So this is Rolling Web with the Ordinary Investor. This is how you invest during a recession, which we are in the middle of right now. It is April of 2020. So if you are prepared, go ahead and get ready. And if you need further help, please make sure you visit theordinaryinvestor.com for more information. And if you aren't financially prepared to get involved, at least watch carefully what's happening all around you, just so you can take note and be prepared for the next one because there will be a next one. This is Roland Webb with the Ordinary Investor. Take care. Peace.